Cool. We can get started. Hi, everyone. Thank you for joining us today. This is the E3G press briefing on COP27, where we come since COP26 and expectations in the next month to go until the Sharm El Sheikh summit. Thanks for joining. E3G is a climate change think tank focused on accelerating climate action for climate safety, and we're based in London, Brussels, Berlin, and Washington, DC. So today we've got three speakers and myself on this panel. We have Nick Mabey, who's our co-CEO and co-founder, and was a friend of COP26, advising the COP26 presidency in the run-up to the Glasgow summit last year. We have Kate Levick, who's Associate Director on Sustainable Finance. She leads our work on sustainable finance across the board. And Maria Pastakova, a Senior Policy Advisor focusing on energy diplomacy and the fossil fuel transition. So just some house rules before we get started. We'll be taking questions in the chat. So if you have a question, put it into the Q&A box and we'll bundle them together if they're related, or we'll take specific ones if you have specific questions or specific questions to specific people. And to begin with, we'll have each of our speakers go through 5 minutes, some opening remarks on areas of their expertise, and then we'll have a Q&A at the end to bring it all together. This is an on-the-record press briefing, and it is being recorded, and we're happy to share the recording with you afterwards, and you can share it with colleagues who weren't able to join. So we'll just get started and dive right into it. We'll begin with Nick. Nick, it would be great if you could just provide some opening remarks on COP26, where we left last year, where we've come. Obviously, the world's very different now, geopolitically very different, with energy price crisis, war in Ukraine, food security crises, difficult economic conditions. What does this mean for the past year on climate action, and what does it mean now with a month to go until COP27? Oh, and I think you're muted, Nick.
So someone else is controlling my mute. Good afternoon, everybody. And just Tom Evans is your chair this afternoon from our climate diplomacy and geopolitics program. So thanks very much. I'm just going to cover in a kind of intro sense 3 things. Firstly, the changing context from COP26 to COP27. Secondly, what COP27 needs to do. And then thirdly, just going through some potential flashpoints and landing grounds, which we see, which the others will pick up in more detail. So, what's happened since COP26, which seems an awful long time ago now. In fact, I was just checking my notes from the end of COP26 to make sure my memory wasn't still there. We left Glasgow with a very mixed set of momentum. We had seen strong collective political leadership, a real push on 1.5 and making sure countries came back with ideas for that, looking at issues like coal, and real momentum around real economy initiatives. I think both the business and the investor community felt that there was a real political push towards this clean economy. But equally, there was public and activist skepticism over the delivery of these promises, and there were many promises made at Glasgow, and the integrity, particularly of private sector commitments, such as the GFANZ finance initiative. And so that glass half full, glass empty feeling really sort of exemplified the end of Glasgow. And we had a lot of unfinished business. We had unfinished business on raising country targets and NDCs coming back this year and every year. We had unfinished business around finance, both 100 billion and on adaptation finance. And we had an uneasy truce, I think was the best way to put it, because it wasn't an agreement on loss and damage, which of course has become more. And Glasgow, essentially the context was really dominated by US-China geopolitical tensions, and that came out in negative ways, but also in positive ways. The idea that there was a war over who was going to build the clean infrastructure for developing countries, that this was coming forward through the post-COVID recovery agenda, which was on people's minds for the World Bank, the MDBs and the IMF. But it was very much seen that climate was this source of cooperation, and in many ways, Glasgow's helps heal or slightly heal a lot of the tensions that emerged over the COVID period between developed and developing countries on access to COVID vaccines, on deaths, and some of these structural issues in that way. But as Tom said, it's a very different context now going into COP27. Obviously, political attention is focused on Russia-Ukraine and the impacts of that through energy prices, food prices, the impacts on debt markets, of interest rate rises, particularly in the US. And we have a US, China, and Europe who are all distracted in different ways by their domestic politics, whether that's midterms or the plenum coming up, or dealing with the response to winter and the energy crisis in Europe going into Sharm. So that process we had, and it was always going to be a bit after a big 5-year COP like Glasgow, major political leadership coming in, is not there, but it's also not there in terms of delivery. So a lot of governments are struggling to maintain political attention on delivery. And again, we've seen a reversal, I think, of that rebuilding post-COVID of North-South relationships, with tensions increasing over responses to Ukraine, whether that's at the UN General Assembly or in the bilateral diplomacy in Africa, rising debt costs, rising climate damage, and rising rhetoric, I think, around climate damage and responsibility. So we see at COP27 really difficult diplomatic tensions while we have leadership of major countries being distracted. And that always raises a diplomatic stakes, because it's harder to appeal to senior leadership when they haven't been focused on a process. So I think in the best case going into Sharm El Sheikh, we will get some of the core agenda done and rebuild some of the idea of a process towards more substantive COP28 when there needs to be the overall stock take. In the worst case, we will see the tensions, the diplomatic tensions, the broader tensions coming out in terms of fights over the agenda, stalling, standoffs, and really coming out of Sharm, which won't collapse. I think it's very unlikely to be a collapse, but just a sense of deepening mistrust and deepening feeling of hardlining positions, and countries feeling they need to kind of fall back on old lines in order to get work done. So it's, you know, it's not the wave of positive energy we were hoping to come out of Glasgow and push forward for Sharm, and so it's fallen back into a slightly more old pattern. And so what does COP27 have to do for the broader public? Well, firstly, we need to go back to mitigation and see, are we the potential for keeping on track with 1.5? One of the big innovations of Glasgow was the idea of countries coming forward immediately with new targets. We've not seen many targets. We will see a gap report before Sharm El Sheikh, which I'm sure will show there's a huge gap left. There may be more scope for targets to come forward, new targets potentially from the EU in 2023. But despite the fact that targets haven't moved, the real economy has moved hugely. We've seen huge progress in China in terms of investment in renewables, half of renewable investment. The USA finally passed the IRA. The EU is pushing forward huge amounts of investment in the context of Ukraine. So we're seeing a huge pulse of clean investment from the major economies, which massively outweighs any small fossil uptick due to the Ukraine immediate pressures this winter. So again, we've got the kind of formal targets stalled or not moving much, but the real economy moving hugely. And I think we've also, so that's the first one, and how that narrative is handled is going to be critical, that balance. Secondly, we need to see some credible progress on the big Glasgow initiatives, coal, cars, forests, the breakthrough technologies. And can the UK in particular show that those have become sustainable progresses and they weren't just smoke and mirrors in Glasgow? And that's where also the integrity of the major private sector initiatives on carbon markets and finance will come through. Is greenwash going to be still now? There's a lot of processes on the way to make sure those private sector processes are real and not real. So the mitigation bundle, even though it's not in the negotiation rooms, is critical for, again, the kind of adjudication point and the public perception of this. The second bundle is solidarity. You know, where are we on the 100 billion roadmap? There'll be a new update on that. Have we really doubled adaptation finance? Probably one of the biggest litmus tests. And these initiatives with South Africa and now Indonesia and Vietnam to fund coal phase out, fund clean energy, are they actually delivering? And I think one of the issues coming in, which is a problem, is the underperformance of the multilateral development bank, which was a big issue, obviously, at the UN General Assembly with Malpass's remarks. You know, they were meant to be the motor of clean investment into emerging economies. And this will come up at the IMF bank meetings going into Sharm El Sheikh. You know, have the big shareholders managed to get these institutions to really deliver for countries who are facing so many pressures? And then lastly, obviously, the COP negotiating agenda, the adaptation goal, a new mitigation program, and loss and damage, which has taken up a lot of the oxygen recently in the activist community, but again, it's just one stream here. The Egyptians face a bit of a problem or perhaps a benefit, they haven't got a must-complete agenda. In terms of formal negotiations, they can kick things forward for the next year, but they will want to make progress, and they certainly signal they want to make progress on the adaptation goal to get as much of that done as possible. But I think loss and damage will also be critical, and that's where, on the flashpoint. So loss and damage, obviously, we're hearing there's good discussions on substance at the technical level, but they're not negotiating yet. There's some potential to agree a way forward, but the question is, will it be wrapped up in broader politics? And I think that's very much about the context going in. Perhaps the context of midterms is going to be quite important on that, but also the broader, as it always is on loss and damage, disasters in the world. Pakistan was a huge driver of attention over the last few weeks and months. Secondly, adaptation finance. Can they, developed countries, demonstrate they are credibly doubling? And then the third flashpoint issue, which is very much about Africa, and Maria will pick up on, is about financing for gas, and what's the role of gas in the transition? Is Africa being unfairly starved of finance for gas, which they need for their economies to develop, or is this credible? The recent reports out today showing how little money is flowing to Africa for the clean transition and adaptation. So again, this is also about tensions about access to finance. So I think, just to finish, at the heart of all of these tensions is at COP is the unfairness of financing, particularly for less developed countries, Africa and the vulnerable countries, who are facing increasing high costs of debt. They're still paying back money from COVID. They've got food, energy, and climate damages, but they're not seeing counterflows of clean and resilience financing. And there was a big push at Glasgow to say there would be big finance reforms post-COVID to try and make access to financing for these countries much more equal and aligning with the goals of sustainable development and climate. But really, that's still due to Ukraine. And there's been a recent initiative, the Bridgetown initiative from Maya Motley, to kind of reboot that. But I think this is where Kate's going to come in. This issue, one big thing that could come through is a rebooting of that broader financial agenda to just reset the context of COP and allow these other issues to have a bit more of a tailwind going forward. Otherwise, in danger of kind of small arguments over bitter things dominating the agenda and the messaging coming out of Sharm El Sheikh. Over to Kate.
Thanks, Nick. Yes, Kate Levick, Associate Director on Sustainable Finance. I mean, Nick set that up perfectly. Yeah, finance is absolutely critical at COP27. It'd be great to hear your thoughts on just kind of diving a bit deeper, why finance is so important. COP26 obviously set up lots of initiatives, or took stock of progress on the 100 billion, but Nick pointing out there the need to kind of look at the wider finance reforms needed. What progress have we made there, and what do we expect at COP27? And then likewise on the private sector side, lots of questions about accountability, greenwashing of private sector action. What is it that COP27 is going to be doing around that? Thanks, Kate.
No, brilliant. Thanks, Tom, and thanks, Nick. So finance, it's critical to COP27, and it's critical in two interlinked ways, which Nick has touched on. So first of all, critical negotiation issues that could make or break the success of international action on climate change come down to financial agreements. And that's been the case for the last few years. The issue becomes ever more pressing in terms of the success of these talks. Secondly, the COP is taking place in a bigger global context, and it's a polycrisis. Countries that are taking part in these negotiations all have a huge stake in how the global financial system, and that does include the multilateral development banks, will be used to address the current global challenges. Nick was talking just now about a lack of progress in terms of access to finance for developing countries. The broader context for these countries is that this year, with the crisis around Russia and Ukraine, following the COVID crisis, there's effectively a big sucking noise as foreign investment was sucked out of these countries, a more difficult environment for them to operate in, and very little fiscal space to be taking climate action steps. So at COP, money, as we all know, money is a means of exchange. The underlying commodity that's being exchanged at COP27 is trust. So there are long-standing disappointments around that totemic $100 billion number. And as Nick says, it's going to be very important to see something acceptable, or everyone can live with, coming through around that this year to enable countries to have a meaningful discussion around the next version of that, which will be the post-2025 climate finance goal, snappily acronymized as the NQCG, which should be based on actual needs and developed in consultation with recipient countries and not just be a totemic number plucked from the air. So that's a very important discussion to try and make progress on in Egypt, and very difficult to have a very balanced stakeholder discussion in an atmosphere where there's acrimony and, as Nick says, bitterness over small things. Now, COP26 was an important moment for transforming that discussion. It was a moment when discussion of the needs of developing countries moved to not just being about billions of dollars, but trillions of dollars. And we really saw that rhetorical shift. However, with all of the pressures of 2022, that rhetoric has substantially died down. We see talk being more around billions again. And I'd also say that of the different needs of developing countries, it's still easier, politically a lot easier to discuss some of those needs than it is to discuss others. Most notably, loss and damage remains a highly contentious issue where little concrete progress has been seen to date. Despite the large scale and increasing very visible impacts of climate change on countries around the world. And to date, there has still been a flashpoint issue that finance for adaptation remains insufficient. So the financial system is starting to make moves around these issues, not necessarily as much or as fast as we need, but it's happening. The IMF's recognition of climate vulnerability as a factor for financing for developing countries through the RST is a really welcoming shift in international thinking. And as Nick mentioned, there's a much broader and deeper agenda for international financial system reform being championed by Barbados called the Bridgetown Agenda. And I think we're going to be seeing a lot more around that, including coming through around COP27. Now, to turn from billions to trillions, we're expecting the private sector to mobilise much of the capital that's required for climate mitigation and for adaptation. And we are seeing big structural shifts in market trends. So according to Bloomberg New Energy Finance, in every year since 2017, wind and solar have accounted for the majority of new power generating capacity added to global grids. And in 2021, they hit a record 3/4 of the new capacity built. And including hydro, nuclear, and a few other sort of ones that people like to argue about the definition of, zero carbon power accounted for 85% of all new capacity added. So this is not just a response to events of this year in Russia, Ukraine. This is a longer term structural trend that we're seeing in the market. And market actors are rapidly adapting their business strategies. GFAN signatories and UK firms will now be required to publish their organisational climate transition plans for net zero emissions by 2050. So we're seeing a lot of increased activity and discussion, shall I say, around all of these voluntary commitments. Voluntary governance mechanisms have really reached their limits, and regulators around the world are increasingly setting out climate-related expectations and requirements for private firms. That's the pivot that we're seeing in lots of different geographies, and that includes the UK, for example, around this transition plan requirements. Some of the pushback we've been seeing to this around the edges really results from financial firms starting to adjust to that new regulatory reality. So that's the private sector. As Nick also mentioned, multilateral banks are going to have a key role to play in finding international financial solutions that mobilise finance at scale to developing countries. So it's key that those banks are Paris aligned, which they have all pledged to be, but we haven't seen all of that brought through into reality yet. And it's also key that they use all available tools, that includes their thought leadership, for all the functions that only those big public banks can take. So investing in public goods, but also building new markets and leveraging private finance at scale. So there are a suite of reforms on the table that can potentially enable that to happen. One is the set of recommendations that's in the G20's Multilateral Development Bank Capital Adequacy Framework Review. There are also broader opportunities for public bank reform within that Bridgetown agenda that's being developed under the leadership of Maya Motley. As Nick says, we have seen slow and uneven progress and definitely a lack of leadership from the World Bank, and looking for a potential change in this dynamic would be a great outcome from COP27. So I think that's probably my top thoughts on finance for now. I'll pass back to you, Tom.
Thanks very much, Kate. I mean, that was been a really useful overview of a number of different areas, but kind of how they piece together towards COP27. We'll turn to our last speaker, and then we'll go into Q&A. And if you have any questions, please do enter them into the Q&A box in the chat, and we can go through them then. But before then, Maria, it'd be good to talk about the final thing, energy. So obviously, this year's been, quite significant for an energy crisis, energy prices, gas prices, defining a new context for the energy transition. It'd be good to have your thoughts on what it all means, what it means for COP27, and also, of course, COP26 saw energy diplomacy really around ending coal, around ending fossil fuel subsidies, around new commitments to end oil and gas. Where have we gone since COP26, and what could we expect for COP27? Thanks, Maria.
Thanks, Tom. So on energy, I think we all know that the shifts that have been triggered on the global fossil fuels market in particular have been absolutely unprecedented. This year, we have a truly global energy crisis, which, unlike the oil crisis of the 70s, really matters or affects all the countries in the world. Nevertheless, the top line on where we got despite the crisis on energy would be that there still has been some progress, and despite absolutely unprecedented and very difficult conditions, there has been no backtracking on commitments that have been made at COP26. But maybe to start first with what has been agreed on COP26, we had a large number and large range of commitments to accelerate energy transition. For the first time, governments actually came forward with targets of sufficient ambition to put the world on a global warming pathway below 2 degrees, to be exact 1.8 if we believe the recent assessments of the International Energy Agency. So there was a major progress on commitments, although there is still homework left to kind of to deliver the last 0.3 degree ambition. COP26 has delivered a real shift in political commitments in coal, and we saw that clearly that politics is finally catching up with the real economy trends, because we have seen the drastically decreasing economic viability of coal for years up to COP26, and most OECD countries were aiming for a 2030 coal exit even before putting this into political commitments. But now we've seen also new instruments that were put to life to support particularly the countries of the global south in their transition away from coal and to clean energy based energy systems within the Just Energy Transition Partnerships and the Glasgow breakthroughs. Aside from coal, though less prominent back then, COP has also seen several commitments that provided a historic shift in the overall narrative on fossil gas. For the first time, in fact, gas has been addressed as a climate issue. And we've seen among key initiatives, we have seen the launch of the Beyond Oil and Gas Alliance, the first alliance aiming at curbing oil and gas production. We have seen the Global Methane Pledge, which has by then been joined by 109 countries and aimed for a 30% cut in global methane emissions by 2030, as well as the International Statement on Aligning International Public Finance with the Clean Energy Transition, which pledged to end all international public finance in fossil fuels by the end of this year. So we had a really impressive actually range of commitments, but where did this year get us to? What we see is that the war in Ukraine obviously has exposed the vulnerabilities of the currently dominant fossil fuel-based energy systems, even more so than the COVID-19 pandemic did. We have seen some cracks in the system already during those 2 years, but the war triggered a historically unprecedented prices across all fossil fuels. Coal prices globally went up 3 times, gas market prices up to 10 times, particularly in the European market. And a race for energy security has kind of begun, not just within European countries, but also within countries of the global south in particular, exposing countries' dependence on fossil fuel price and supply volatility as kind of one of the central security risks. And at the same time, we have seen that the energy transition has been, for the first time, at least at this scale, put on the national security agenda of all leading economies, which provided also some tailwinds for further supporting the political commitment to transition away from fossil fuels. So the turmoil on fossil fuel markets and the short-term dash for non-Russian fossil fuels by the EU hasn't, from what we've seen, undermined the commitments made in Glasgow. In fact, there has been some progress on all of the mentioned, if it wasn't as pronounced and active as intended. At COP26, we saw the methane pledge grow by over 10 countries, so there have been some further signatories to the pledge. The launch of International Methane Observatory that happened back in October last year brought us, by the end of this year, a really good comprehensive database on methane emissions. We saw that some other signatories are considering joining the international statement on phasing out fossil fuel finance internationally. Most importantly, Japan, the second largest financier of fossil fuels globally, has joined the pledge within this year's G7, making it a G7-wide commitment. We have seen some of the countries that have signed this statement come forward with their own national policies that are aligned with this pledge for international energy finance, most notably the US and Belgium, and other countries such as Germany, for example, are currently working on their own national policies. So the progress has been there. It's been a bit more incremental than we've hoped, but it didn't stop despite the crisis. And I think the Beyond Oil and Gas Alliance is the most evident example for that, because if there were any year for a multilateral initiative to curb oil and gas production to fail, then this would have been it, because we're in a really tight gas market, and oil market is very unstable. So we could have as well seen this alliance crumble. This didn't happen. We have seen BOGA continuing its work. It established a secretariat and started through internal conversation, think through elements of an orderly wind down. Some new countries are expected to join the alliance at COP. But admittedly, there hasn't been much of the real on-the-ground progress, partly due to the crisis and the policymakers, as Nick and Kate mentioned, being largely distracted by the geopolitical shifts, and partly to the fact that many of the established initiatives were really new and needed to sort out their internal processes and build institutions. What does it mean for us, and what is the direction of travel on energy in particular? We see that the ongoing and overlapping crisis, and energy is in fact only one, but also one of the main causes for the exacerbated food crisis or debt crisis. They have made the direction of travel even clearer, where the clean energy systems are a key pathway for responding to the crisis and boosting economic resilience and protecting the most vulnerable population groups, not only from climate impacts, but also from economic shocks that are caused by fossil fuel price and supply volatility. And we also see that developed countries have already taken some decisive steps to move in this direction, most notably the US with its recent Inflation Reduction Act, and the EU with the REPowerEU strategy. Also, the countries of the Global South acknowledge the need to move away from fossil fuel reliance for the sake of their own resilience. But there is a real risk of them not being taken on board without financial and political support in place, because unlike the EU and the US, they are struggling with again unprecedented debt crisis. They don't have this fiscal space to accelerate the action, and they really need support of the countries of the global north. In terms of what it means for COP27, as I think already mentioned, we'll likely not see any new major commitments or decarbonization goals that go far beyond what has been pledged at COP26, as the energy ministers of both global north and south are clearly prioritizing the short-term responses to the ongoing crisis over review of the long-term strategies. But what is most needed, and we expect to see this year, is particularly in order to maintain trust in the whole process and also start to effectively address the ongoing crisis, is clarity over the delivery pathways. And the global north countries really need to step forward with clear political and financial offers to support and accelerate the transition in the countries of the global south. Over the year, we have heard several numbers within different formats. One, the 8.5 billion for the Just Energy Transition Partnership in the South Africa. We have seen the 600 billion number being put on the table by the G7 within the PGI initiative. The EU pledged 300 billion within the Global Gateway, but now these numbers really need to be translated in concrete financing mechanisms and clarity over funds. We don't really know, is it new money? To what projects is it linked? What is the process? Where are the peer-to-peer dialogues to make sure national development goals of the recipient countries are at the core of these partnerships? So this needs to become much more concrete at COP27. And maybe finally, to come in on gas, which of course will be in focus of COP27 as a hot topic for not just for many producing African countries, including this year's COP host, Egypt, but also for many other countries, both in Europe and other regions. We've already seen joint statements by several African countries signaling that they will continue protecting their right to explore domestic gas resources for their own development. The EU countries, particularly Germany and Italy, who have been negotiating new gas delivery contracts with some of these countries, don't stand there in very good light, and it will be a very difficult COP for them. Because on the one side, of course, they want to maintain the commitment not to finance a new gas in Africa. On the other side, they signal that they need this as a short-term relief. But what we really see is that the economics of gas are in fact already bad across most smaller and new producing countries, and most African countries are actually these kind of producers. We see that EU demand for gas is dwindling. With the current policies in place, it is to shrink by 30% by 2030. So the EU is not the buyer to take off any new gas that these countries can come forward with. And the African energy demand cannot be, on the other side, satisfied by the new projects that usually have 10 to 15 years of development timeline, while on the other side, if the finance is in place, if the politics is sorted out, clean energy solutions are technically and politically much more attractive and just a better investment case. So the EU countries are not in the position to tell the African countries what to do with their gas domestically. They will, however, need to signal clarity over their own demand for gas in the future, and this demand is shrinking, will continue to be shrinking in the coming years. They will also need to clearly signal their future demand for alternative resources. We've seen some countries pledging, turning fossil fuel partnerships into hydrogen partnerships, or partnerships into partnerships based on export of critical raw materials. But there is no clarity whatsoever over the future demand for green hydrogen on the European market. There is no clarity over how many resources are going to be needed within this market or going to be needed in the countries themselves. So the EU really has some work on that. Most importantly, they will really need to come forward with a clear offer on how they can boost growth in many of these countries with emerging and existing energy partnerships. If there are countries that don't want to finance gas in Africa, then they will need to provide an alternative that is also much more viable economically, focusing not just on closing the energy access gap, and we're talking here not just about light bulbs for the rural population, but some high quality energy access, and on creating local value. What we have seen over the recent 2 decades is the local value in most African economies has grown by 0%, despite all the promises and all the economic partnerships. And this really needs to change. We cannot just focus on resource exports or funding energy for the sake of transporting it to the developed markets. I will stop here and look forward to the question. Thank you.
Thank you, Maria. Yeah, so we'll go straight into the Q&A, and I can see some themes emerging. So we'll probably go through some questions on finance and GFANs and greenwashing, some questions on China, broader COP27 outcomes, and loss and damage. But to begin with, Kate, there's a question from Megan Rowling about, and Kate and Nick, that there could be a reboot of the broader finance agenda that could help transcend the usual rows. What would that look like, and what elements would it have, and what needs to be new about this this reboot of the finance agenda for it to convince developing countries? So Nick or Kate, would one of you want to dive a bit more into that to begin with?
Yeah, I mean, this is picking up from Nick's remarks, but I think between us, we've covered various elements that would need to be required in such a reboot. So first of all, as an absolute basic minimum, we need to make enough progress to, satisfy the politics around the key financial log jams of the moment, right, which are around the 100 billion, the adaptation doubling, loss and damage, and satisfy those enough that it's possible to move forward. That's clearly not a transformation, but it's an absolutely necessary prerequisite before we can go further. I think the transformative discussion, as I mentioned, is the discussion around the post-2025 goal and the possibility of designing that in a very different way, having a much more inclusive process, making it a more co-developed type of goal, maybe not one big number, or perhaps it has a big headline and a big slogan at the top of it, but underneath it is something that really responds to the needs of different countries and is framed in that context rather than just being framed by what donors are prepared to put up that year. That process and the process of developing that dialogue does have the potential to have a truly transformative effect on how the politics of finance works in the COP process. As we've also said, this is no longer a conversation that can just be held in the UNFCCC in a bubble. Climate finance, is really a small part of the broader financial needs that developing countries and emerging economies have got right now, with climate change very much as a multiplier of other woes, other existing problems. And so this would need to be docked into broader parts of the financial system. We already have seen increasingly in the last few years other parts of the financial system kind of coming to COP and showing up and being linked in some ways. Announcements coming out of bodies like the NGFS, links through to the G20 Sustainable Finance Working Group, etc., and other bits of the system. As I've mentioned, we've seen the IMF pushing much faster on integrating climate into its operations. So not all of that can be done within UNFCCC, but the part that is done within the UNFCCC needs to dock into and chime to a set of broader financial system reforms, where, again, it's worth looking at initiatives like the Bridgetown Agenda that are trying to scope out what such a broader set of reforms might look like. We haven't really seen those sorts of proposals with a big vision coming out of the G7 or the G20 lately. That's why they're starting to come out from other directions, but we may see them coming into the G7 and G20 because these are pressures that are not going to go away. Nick, do you want to add to that? Nick, happy?
Thanks, Kate. And while we're talking about finance, I might just have two smaller quick questions that have been posted. One on from Genevieve Redgrave. Do you think the recent news that some pension funds will be leaving GFANs and suggestions that some asset managers will leave as well will hinder the role of these types of groups in negotiations? And I guess a kind of linked, related question perhaps is another question from her. How do you think COP27 will address greenwashing? Should we expect to see any specific policy decisions?
Sure. Well, notoriously, of course, private sector organisations are not a party to the negotiations, and that there's not binding legal requirements on them under the UNFCCC framework. But they've been present and part of the UNFCCC discussions for a very long time. And for quite a few years now, we have had a specific sort of stream of UNFCCC sort of work that is set up with two climate champions who sort of marshal and coordinate efforts from what are called non-state actors, terrible term, so that's companies, investors, but also cities, states and regions, and that includes entities as large as Scotland. So in the sense, I mean, there's a literal reading of the question that they don't have a formal part in negotiations, but in terms of setting the mood music, providing the context in which the negotiations happen, obviously it's extremely important that signals are coming through from all these non-state actors that they're moving at scale, that they're moving at speed, and that then the negotiators can have the confidence to show ambition themselves, knowing that they're moving with broader economic trends and that there are non-state actors who will welcome what they're doing there at UNFCCC. So therefore, all eyes are always on the private sector action as well. And Nick mentioned that going into COP26, there were some concerns about private sector integrity around kind of commitments and delivery, as well as some excitement about the real head of steam that was building up around private sector commitments and participation. So of course, those concerns haven't gone away. We've seen that all through this year. There's been a particular focus on the banking sector, actually, and whether they are delivering on their commitments and the extent to which some banks that have made net zero commitments are still financing fossil fuels and to how that could be compatible with their commitments. Those who followed this agenda know over the course of this year that E3G Climate Champions strand of work, which is called Race to Zero, has published pretty tight new requirements that if you're going to be in that stream with commitments, you are going to have to do certain things. That includes publishing transition plans, it includes getting out of fossil finance. In the last few weeks, we've seen some flurry around that, and that really relates to the regulatory pivot that I was talking about, that as these things get tighter and become more of a real binding commitment, regulators are starting to see statements that companies make as being commitments that they make and binding, and they start to already have a kind of quasi-regulatory status. When you add to that regulators are increasingly putting in new regulations and taking over this area, then for some firms that's nerve-wracking. They're looking at their risks and their liabilities. Things might be going to the board that perhaps haven't quite gone to the board before in the same way. Of course, around the edges, we're seeing some nervousness. I don't think at that point that this is a scale that really detracts from the serious momentum and head of steam that's been built up. What this actually shows is that the rubber's meeting the road and that we are moving into an era of expectations for delivery. But the vast majority of these firms are dealing with that and grappling with that. Concerns around all of this, are going to be picked up at COP. We know by the UN Secretary General's high-level expert group headed by Catherine McKenna. So all eyes are on the recommendations that group will make. It will just be recommendations. So I think we will still have at least another cycle to go before what gets recommended puts into action. But I would expect those recommendations again to be addressing how all of this can be moved from the sphere of voluntary commitments into the sphere of regulators. And I would be remiss in answering this question if I didn't also mention that at COP27, the UK's transition plan task force, where E3G is the co-lead on the Secretariat, will be putting out a framework for transition plans for consultation.
Thanks, Kate. And if there's any other follow-up, you can always type some answers into the Q&A. We've had a number of questions on loss and damage, which I might try and answer myself very briefly, and then maybe pivot to talk about some of the questions on coal, China, and the US Inflation Reduction Act and others. I mean, very briefly into some of the questions on the state of play and expectations for loss and damage, and kind of who we might be expecting from G7 and others to be able to push forward on this and what an outcome would look like. I mean, the state of play right now is that it's still very much focused on this question of how we actually represent a discussion on loss and damage in the COP27 negotiations, this question of a loss and damage agenda item. The current state of play is that there has been a general consensus there should be an agenda item on loss and damage in the talks, so there will be space to talk about loss and damage in the negotiations formally, but precisely what that agenda item looks like, even though it's a very technical question, will be important in actually structuring the overall outcome or shaping the discussion that could eventually lead to an outcome. And that's something that's being discussed actively right now at the pre-COP in the DRC. It's something that negotiators have been actively engaged on since the June SB's negotiations in Bonn, where we saw loss and damage, and this question of a loss and damage agenda item really flaring up. So that's the current state of play. We know that Germany and Chile, the ministers there, have been appointed as a pair of ministers to carry forward negotiations on loss and damage and trying to resolve this at a political level. And I think that new political energy into that will be incredibly constructive. But aside from the technical process, the question really is, who is it from the developed country groups that's really going to try and stand forward and champion an outcome and try to be a bridge builder across the rather big divide between some of the developed countries, the US, and some EU member states, and the developing countries and the small island developing states, who are really pushing for a clear UNFCCC outcome on a loss and damage financing facility. And I think we've seen some interest from, for instance, Denmark at the UN General Assembly committing new finance for loss and damage, going to address loss and damage outside of the UNFCCC system. Obviously, as I've mentioned, Germany, Jennifer Morgan, the climate ambassador there, being tasked with this role to steer those negotiations. So hopefully, individuals from those governments would be able to perhaps build some bridges. in terms of the outcome and what a loss and damage outcome at the UNFCCC could look like, I think the big question is whether we do see a political shift and a desire to move forward and actually agree to some sort of financing arrangement and the UNFCCC this year, or whether what we actually see is an agreement for a process to be able to establish some sort of financing arrangement in the years to come. And we already have a process that was agreed at COP26, known as the Glasgow Dialogue, that tries to have a constructive conversation on loss and damage. The problem with that existing Glasgow Dialogue is that it's completely divorced from the negotiations themselves, and it doesn't have the political space to actually generate outcomes. And that frustration that it felt like a talk shop, that's what we saw in Bonn at the SBs in June, and trying to see if we can address that, make the Glasgow Dialogue process more constructive, and ultimately, you know, can we have a agreement around some sort of financing arrangement, even if it's not explicitly called a facility? Could that be a potential landing ground that would be a compromise between developed and developing countries? I think is one of the questions to watch. But we're almost certain to see, you know, the pressure will be very intense from developing countries, from civil society, and clearly the Egyptian presidency is now taking this seriously and trying to push forward a solution. So that's my sense on the state of play. I don't know, Nick, if you had anything else to address on the loss and damage side.
Yeah, I think I agreed. It seems to be something, again, which if everybody's interested in making progress, we will see some words come forward where everybody could, you know, strain the end of their negotiating envelope. If we have some bad climate disasters coming into COP, which often happen, if other issues are going poorly, if people don't feel out of the IMF bank meetings that people have moved on kind of broader issues of finance, this could become the totemic issue that people take a stand about, either for climate or non-climate reasons. So I think that's very much why this issue is kind of wrapped up in that broader space. But at some point, the world is going to have to deal with loss and damage. So again, I think that's the one big change over the last year is developed countries realise that their previous position of kind of we won't talk about it has failed, because they're starting to play loss and damage, or in Florida's feds, not agree loss and damage finance for their own citizens. And so this, again, is part of the, as in finance, as the rubber hits the road of reality, these issues that previously were kind of non-issues are now kind of forcing themselves on the agenda. But it's very hard when everybody is already spending lots of money on other things. So again, it's the opening of a place, not the end of a space, and won't make people feel satisfied. Should I just pick up the China point, just because there were several in the
Yeah, and I might I can see some questions on the facility term, which I'll answer in the chat if I can. But yeah, Nick, go for China. Yeah,
I mean, again, facilities are a wonderful piece of UN jargon. Just on China, I mean, the China coal, so good news that China has cancelled around 15 international coal plants, and we'll hope the rest of the ones they were building as a major financer of international coal are moving down. Bad news, China's continuing to commissioning new coal power plants at home, while building more renewable energy than anybody else and increasing the pace of renewable energy. A lot of those coal plants are being built as part of a stimulus, just like the renewable energy is. It's not that they're displacing gas contracts or they're forming some huge part of energy security, despite some problems with energy security last year, which spooked people. There's a lot of inertia in the Chinese system. Most of the coal plants in China are already running at low capacity factors, and they're still retiring old coal plants. So the balance of capacity will go up. How much of that capacity is used is unclear. It depends on demand. And of course, that's the big story about China this year. It's the slowdown in growth, the meltdown in the real estate market and the construction sector. I mean, China is very different in energy demand to developed countries. 70% of energy demand comes from the industrial construction sector rather than from domestic consumption. So the industrial slowdown in China means it's very unlikely lots of those plants will actually run. So there is a space where that renewables is building and taking up all new demand as the Chinese economy slowed. Now, Chinese policymakers could put another big stimulus in. Very much depends on the way they see the geopolitics and the broader political stability issues in China, which could lead to an uptick in construction. It's a state-run economy. The economy is not predictable because the state plays such a huge role in driving it. But I think it's very much too early to say China is going down a coal pathway. In the end, what's running is renewables, and that certainly seems to be driving out at a pace that was unprecedented and certainly unexpected by people going forward. So yeah, we'll probably understand more of that next year than by COP27.
Thanks, Nick. And if I can turn to Maria on some other questions, I don't know if you have any further thoughts on the China coal question, but also questions on the US Inflation Reduction Act, and also progress on the Just Energy Transition Partnerships in Indonesia and Vietnam, if you have any thoughts on those.
Sure. There is also one question in Russia which I would like to address towards the end. On China, there is, from my side, not much to add, except on the fact that despite what's happening right now in coal, and I very much agree with Nick, it is now about capacity, not real-time generation. We really don't know how much of this will be used. China does have a 33% renewables goal for its power sector by 2025. This is only in 3 years, and from what we know, the goals that have been set by the party are usually being implemented. So China is making progress on renewables. Most of new energy demand is being covered by the new renewables. In fact, last year it installed as much solar and wind capacity as the rest of the world taken together. This year is likely to be very similar. So while it does provide a mixed political message, China boosting or continuing building new coal power plants, we don't really know whether this will translate into boost in emissions in real time, so to say. On energy transition partnerships, so we are likely to see some new announcements coming from Indonesia, not at COP, but ahead of it, or separately in parallel, at the Bali G20 summit. It will likely come forward with its own vision of the Just Energy Transition Partnership, and maybe with a number on what it needs in terms of finance to make this happen. This is a bit a different format, so to say. This is not something that donors came forward with, but this is what Indonesia puts forward as their own vision for this partnerships and for the decarbonization pathway. We don't have much details about Vietnam, and it is not very clear whether we can expect any new announcements aside from Vietnam not being an official candidate for Just Energy Transition Partnership. But on that, I would very much like to hand over to our Coal and Just Energy Transition Partnership expert, Leo, who I think is now participating as well. Leo, if you would like maybe to add something.
Thanks, Maria. Hi, everyone. Leo Roberts from the Fossil Fuel Transitions team at E3G. I think just to reiterate what Maria said and Nick has said earlier about coal, China is increasingly isolated. So China now accounts for over half of the world's operating coal and two-thirds of the world's pipeline of new coal power plants. So countries around the world have been turning their backs on coal. And I think it's really important to reiterate that point about the difference between generation and capacity. So we may have seen a bounce back of generation, not just in China, but in Europe. And this has been very widely reported. But it's important to be seen to see that in the context of declining capacity around the world. So the EU and US are set to be coal-free by 2030. That's a massive statement of intent. Other OECD countries are moving in the same direction. And similarly, we've seen the collapse of the pipeline of new coal projects by over 3/4 since Paris, which represents countries turning their backs on coal. So China is increasingly isolated, but as Nick mentioned, the signals coming from China are moving in the right direction. So China committing to end coal finance internationally has played a significant role in driving the end of the coal pipeline of projects around the world and shifting countries away from coal. Simultaneously, China has been supporting significant renewables development around the world. So there are signals coming from China that coal is recognized as no longer necessarily a suitable way to power a country. And I also just wanted to address this idea that coal has bounced back as a result of Russia's invasion of Ukraine. As I said, we've seen an uptick in the number of coal power stations being kept online. For example, in Austria and the UK, countries have been saying that they might even turn coal power stations online again that had previously been turned off. The important thing to say is that from our analysis, none of this undermines any of the commitments on coal made last year at COP26, which is to say that those countries that had committed to a 2030 coal phase out through membership of the Powering Past Coal Alliance or other commitments made at COP26 are still on track for that. The UK, for example, may keep coal power units on for another 6 months, maybe 9 months, but they will still be off well in line for the 2030 timeline that's set out by the IPCC. Similarly, those countries that have committed to no new coal, to no longer do new coal power stations, not one of those countries that committed last year at COP26 has now explored the possibility of bringing new coal online. So the coal commitments made last year are, as far as standing up to scrutiny. Thanks.
Thanks, Mary, and thanks, Leo, for supplementing some of those answers on the coal piece. We've got a few minutes left. I might try and expand a bit on some of the loss and damage questions, which I've also tried to answer in the chat, and then we might wrap up so we can finish on time at 12:30. I mean, to explain a bit more, I guess, on the loss and damage side. So the concern around this term facility, I think it stems from a fear that I think that the developed country view is that we shouldn't prejudge the outcome of the negotiations, that we should go in and have a conversation as to what precisely we would need in the UNFCCC to actually address the issue of loss and damage. The SIDS and climate vulnerables are really clear that they believe a UNFCCC mechanism, a facility, a fund, a financing arrangement, there's many ways we can call it, but that there's a gap in the UNFCCC that needs to be filled, and that a system is needed, not outside the UNFCCC, but in the multilateral negotiations where every party is involved to be able to address this. It's, loss and damage is something that's set up, it's recognized in the Paris Agreement, and therefore it should be responded to at the level of the Paris Agreement too. There are existing pieces of architecture and financing arrangements outside the UNFCCC trying to address loss and damage. We have, for example, the G7 Global Shield initiative that's been taken up by Germany this year and pushed as a umbrella solution, bringing together existing initiatives and trying to coordinate better issues, mechanisms like insurance to address loss and damage. And there's also new initiatives like the V20 Joint Climate Fund, which is pioneered by climate vulnerable nations who are trying to set up a new system, a new fund that works for them to try and pool money and have finance flowing to address loss and damage. The general feeling, I'd say, or the general argument around why a UNFCCC facility could then answer some of these problems is that the existing initiatives aren't enough. They're piecemeal and they don't necessarily form a comprehensive architecture for addressing loss and damage. So one example is non-economic losses, so impacts of climate change that aren't necessarily easily quantified, but are nonetheless equally material: cultural loss of livelihood, these sorts of kind of more, perhaps sometimes less tangible impacts, but still incredibly important for climate vulnerable countries. And so a UNFCCC mechanism could address those. Likewise, there's concerns from some countries that existing systems are too slow. So there is already the Green Climate Fund, the GCF, but it's an incredibly political body. The negotiations around it are very slow to release money, and they won't work on the timeframes needed to address immediate climate impacts. So again, a facility could try and address those questions. But the counter argument, of course, and it's a valid point, is that creating a facility in itself might not, how do we create a facility in a way that actually addresses those questions? And that's the hard part of the work. And a lot of work and diplomacy going on right now is trying to bottom out these questions of, well, what exactly would a facility look like? How could it be complementary and value add to the existing system? And how would it actually work? So some of those questions are ongoing.
I just want to a quick just as there was a question on Russia, as far as we know, the Russian delegation is coming. That's the expectation, certainly, of the current COP president. And again, I kind of simply, the piece is basically the problem with loss and damage is the political case has not been won in donor countries yet for a major uptick of money, and doesn't matter whether you call it a facility or a fund or go through existing other ones. There's no politics for more money at the scale needed right now. So, and developing countries know this. They think the facility will give them more political leverage rather than less. But in the end, it's going to take another major COP, I think, and leaders to come back in at a serious level to really address this at scale. So it's the question is, do people get entrenched, or do people move that conversation forward, and does that move the public debate forward and change the politics around it?
Thanks, Nick. I'm conscious we're at time, but I will very briefly try and close this with a quick kind of rapid fire 30-second answer from everyone. Just kind of trying to summarize what we've been talking about. Where do we end up at the end of COP27, and what would be your ideal COP27 headline when Sharm El Sheikh closes? And Maria, we'll go with you first.
I was actually hoping to hear some punchlines from Nick and Kate first, but so two maybe keywords for me regarding COP27 expectations. One is finance, and we don't just mean new commitments, we need concreteness over the commitments that are already on the table. And the second one, clean energy-based systems put at the core of the response to the ongoing overlapping crisis, climate crisis, food crisis, and the energy crisis. And these actually only come hand in hand together. You cannot make one without the other. I would maybe leave the job of taking these two into a punchline to our colleagues from the media, and hand over to Nick and Kate.
Thanks, Maria. Kate?
Yeah, I mean, I'd echo what Maria says in terms of concrete commitments. We know it's a very difficult context, but there has to be enough on these flashpoint issues to get us through. And I'd like to see the seeds sown of that more transformative agenda that we hope to get to within a few years. And of course, to make sure that those signs of market momentum are still coming through very visibly to help ease all of that along.
And if I may,
Nick.
Europe and Africa agree transformative clean energy deal would be a nice headline to see, which is not beyond the bounds of possibility. The alternative one is climate train stays on tracks, which would be the minimum one. But an important one, again, I don't think you can underestimate, with the European war and global multiple crises going on, the fact that we're not seeing major backsliding on climate and actually seeing an acceleration in the real economy and increased investment is quite amazing. And if you'd said that to anybody 5 years ago, they would have laughed at you. So we won't always be top of the agenda every year. And this wasn't one of those years, but I think it shows the resilience of the politics and the economics underlying the transition that we're even talking about incremental progress at this COP.
Thanks very much, Nick. And sorry that we've run over slightly. Just to wrap up, thank you very much for joining. As I said at the beginning, a recording of this will be available, and we'll share it afterwards, along with a list of E3G spokespeople that will be on the ground at COP27 or following along remotely to follow up with. We'll be holding another press briefing specifically on the IMF World Bank annual meetings this Friday, and the link to register for this will be sent around in a follow-up email as well. So I think that's everything from me. Thank you very much for joining. Thank you, Nick, Kate, and Maria, and Leo for speaking. And we'll see you soon, and hopefully at COP27. Thanks very much.
Thank you all.
Thank you all.